Started already. You can start now.
All right, good afternoon, everyone. My name is Olatunji Wahab. I'm one of the lecturers that will be taking public sector accounting. Today, we are looking at two topics. The first one, which is the introduction to public sector accounting, while the second one is the constitutional and regulatory framework of public sector accounting. So on the introduction to public sector accounting, the subtopics that we are going to be looking at include the definition, explanation, and terminologies of public sector accounting. We are going to be identifying the objectives of public sector accounting. We need to understand the users of public sector accounting. And lastly, we are going to differentiate between the private and public sectors. Under the introduction to public sector accounting, this deals with government in general. The introduction, we have to take into consideration what is government. And in public sector accounting, we also need to note some certain things that are happening in the economy, most especially in the public sector. Now, the introduction. We're having a brief introduction about the public sector accounting, introducing us to government and what are the roles of government. Also, we'll be looking at the differences between the public sector and the private sector, which is the government, publicly owned, and the private ownership, as well as what are the structure, that is the users of public sector accounting. What do we understand by government? In our basic knowledge of government, we're being told, or we learned, that government entails or refers to the collective public institutions that are being elected to govern, to control resources of a nation and give account of all the activities that has been entrusted in the public officer or the public holders. So government refers to the collection of public institutions established and given the authority to run the affairs of a country. What are the public institutions? We have the users, the primary and the secondary users, and how to run these affairs of these governments of a country. So it's a system of a governance which includes a body of individuals who are authorized to administer the laws of a nation. There are laws, there are rules and regulations that governs the attitude, the behavior, the accountability of a nation So those that are entrusted into power are expected to govern the nation according to the laws of a nation. So the authority given to those that are in government is to govern the individual and the citizens with the use of the provided laws of the nation. So these are governments. So government entails public institutions, authority to rule the affairs of a nation. We move on to the definition of public sector. Talking about public sector, there is a little difference between public sector and government. Government is a public institutions, elected people into authority to govern the country or nation. While public sector is that public institutions, is that organization that is being set up to monitor the affairs of the entity or the country. So the simple definition of public sector is all organizations that are not privately owned and operated, but which are established, run, and financed by governments on behalf of the public. Look at this definition. It states that it is not owned privately, that is public sector. It is generally owned by a group of what? Group of people or nation. Owned and operated, which are established, run, and financed by government on behalf of the public. The establishment is the law or constitutions that entails what are the practice, the rules, the guidance to run the affairs of a nation on behalf of the general public. So that's the definition of public sector. That is, it is not a privately owned institution, but it is generally owned, ruled, and governed on behalf of the general public. Having defined government, public sector, we need to know what is public sector accounting. From the definition of government and public sector, we can arrive at the definition of public sector accounting. Now, our basic knowledge of definition of accounting, we made known that accounting can be defined as a system of recording, classifying, summarizing, splitting, and giving reports, interpreting financial records to the general public to make a vital or timely decision. That is accounting, that is keeping a record, finance, sorting, summarizing, and giving a report. That is the interpretation of financial statements or financial records. Now, let us now incorporate this into public sector accounting. We've defined government to be owned by the general people and given authority to a single person or party to rule on behalf of the country. While the public sector is that institutions that is being established by law and run on behalf of the general public. Moving on to public sector accounting. So this refers to all the financial statements and records of public institutions. That is the account of the ministries, departments, and extra-ministerial departments. All the financial records of public institutions that relates to the collection of taxpayers. We are still coming to sources of government revenue. Money and the analysis, control of expenditure, administration of trust funds, management of government stores, all the financial responsibilities and duties of relevant organs. This is public sector accounting, giving a detailed report to the general public or the users of the public sector accounting. So this refers to the collection of all financial data and give a detailed analysis, giving a report on all the activities that has occurred financially during the administration of a given public officer. So public sector accounting system is a way of accountability through which the established institutions of the public render stewardship, that is, give account of what has occurred during a fiscal year on the revenue of the national and how it has been disbursed. So governments are entrusted with a responsibility to manage the affairs of all the citizens. At the end of the fiscal year or at the end of the financial year, they are all expected to give a report of all the financial statements, all the financial activities that has occurred. Then fits both the revenue and the expenditure at the end of the year. Now, these are the processes of public sector accounting. The processes of public sector accounting is not different from that of the conventional financial accounting, except the basis at which the processes were being carried out, because the basis of public sector is quite different from basis of the conventional financial accounting. Public sector accounting includes the process of recording, analyzing, classifying, you summarize, communicating and interpreting financial information about governments in whole or in total, recording all transactions involving the receipt, transfer, disposition of public funds and property. So the processes include recording, analyzing, classifying, summarizing, communicating, and interpreting. Now let's take a look at all these processes and what are the expectations of the public officer on all these processes of accounting in public sector. I believe we are all together.
Yes, we are.
All right.
Yes,
now the first one, which is recording. We are talking about recording. We also have a recording in our conventional financial accounting. What do you understand by recording? All transactions or evidences of transaction needs to be recorded in the books of accounts. Recording involves the process of documenting the financial transactions. You document it, and activities in the necessary books of accounts are the books of accounts, which include, we have the cash book, we have the ledger, and the vote book. And the purpose of this recording is for evidence and for audit trail to confirm if a transaction actually occurred. Transaction will not be recorded if it has not been processed. So recording will involve putting down, that is documenting the transaction that has occurred in the books of accounts. We have analyzing. Analyzing involves the process of separating transactions according to their distinct nature, posting them under appropriate heads and sub-heads. In our conventional accounting, we have what is called coding and codification. In public sector accounts, we have heads and sub-heads. the classification under our conventional accounting might be different, might be a bit different from the public sector accounting because of their differences in operation. So in analyzing, what are we doing? We are separating. There will be a need to separate transactions according to their nature. For instance, if you're having items that's supposed to be recorded in office segments, that will be separated from those that will be recorded or that will be recognized as procurement expenditure. So this analyzing entails the separation of transactions according to their nature. So this will be posted under the appropriate heads and sub-heads. We have classifying. This is another process. Classifying has to do with the grouping of the transactions into revenue and expenditure description. In public sector, it focuses on revenue and expenditure. This revenue has to do with all the income generated by the government, while the expenditure entails all the expenditure, all the disbursements to carry out a project. We have to classify them into different revenue heads and revenue sub-heads. We have expenditure head and the expenditure sub-heads as well. Summarizing, we summarize by bringing together all the classes of accounts that has been separated into a single page for easy identification and collation. Summarizing concerns the bringing together of all the classes of accounts and preparing them into reports periodically as statutorily or organizationally required, at least that is being expected by law, governed by law. So we summarize by bringing all the heads that are related together, all the subsets that are related together in order to have a comprehensive report at the end of the financial year. Nature and objectives of public sector accounting. The nature of public sector accounting refers to organizations that are created, administered, and financed by governments from the taxpayers' money on behalf of the nation, on behalf of the public. That is the nature of public sector accounting. The nature is by creating a department, administer, monitor the affairs, and financed by the government. And what are these finance? Where are they sourced from? These are sources from who? From the citizens. And that is the reason why the funds that have been entrusted in the public officer are expected to be used on behalf of the public. Now, the objectives of public sector accounting include the following. So these are the expectation. These are the expected outcomes in public sector accounting. Now, we have the ascertaining the legitimacy of transactions and their compliance with the established norms, regulations, and statutes. This is one of the objectives of public sector. That is, there needs to be a transaction record that has been carried out. Administer a transaction record that has been carried out in accordance with the regulations, with the laws. We have the laws that are governing the preparation of financial statements, both in conventional accounting or the public sector accounting. So there are rules that are guiding the preparation of public sector accounting. So the objective of public sector accounting is to ascertain that these financial statements were being prepared in accordance with the established laws. And what are the established laws in public sector accounting? and that is what is known as IPSAS, International Public Sector Accounting Standards. We are still coming to that. 2, providing evidence of stewardship. Evidences of stewardship, that is giving a record of previous transactions, giving accounts, being accountable for all the past transactions, assisting planning and control. When there is a proper planning and control, the aims and the objectives will be easily achieved. So this is one of the objectives of public sector accounts, to assist in planning and controlling. That is, to assist the government in planning what are the expected capital projects, what are the economic growth that have been expected of them to have been carried out. So public sector accounting will assist. This is one of the objectives of public sector accounting, to assist planning and control. Assisting objectives and timely reporting. We have users of this public sector accounting, and these users, they are all having expectation. What I am expected from the government might be different from what other parties will be expecting from the government. And we are still going to talk about that under the users of public sector accounting. Providing the basis for decision making. Yes, public sector accounting will provide the basis for decision making. Using the previous year reports, the government can make a decision on the coming year projection. Looking at what are the achievements of the government in the past year, and that will be used to forecast the planning, the budget for the coming year. So the public sector accounting reports will assist for decision making. Enhancing the appraisal of the efficiency of management. To also enhance, that is, it will ease the appraisal of efficiencies of management. This will give an appraiser to those that are entrusted or that have been given the authority to carry out some tasks. We have the ministers, we have the president, we have the governor. This will give a link on how to monitor the performance of those that are entrusted or those that are in governance, highlighting the various sources of revenue, receivable and expenditure to be incurred. Yes, public sector accounting will highlight, that is, it will give a detail of various sources of revenue. Under the sources of revenue, we have revenue from oil and gas. We have different heads for this revenue. We have revenue from oil and gas, we have direct tax, we have indirect tax, we have mining. So the public sector accounting reports will give a details of all the sources of revenue, receivable, and how they have been expended and how they are to be incurred. Identifying the sources of funding capital projects. Yes, this is another objectives of public sector accounting. It will identify the sources of funding capital projects. And these capital projects, they are capital in nature because of their nature and the period at which such projects will be financed. And these capital projects, these are projects that are huge. They are large projects that need excess funding. Example of this capital project, we have roads building, railway construction, we have bridge construction. So public sector accounting will help to identify the sources of funding capital projects. So if local funding cannot be able to cater for this capital project, that is internal sources, if this cannot be able to fund the capital project, that means the decision will now be the government will be catering for how to source for funding capital projects externally. Evaluating the economy, efficiency, and effectiveness with which public sector organizations pursue their goals and objectives. Public sector accounting also assists in evaluating the economy. Yes, give evaluation of the economy. Is there growth in the economy? Is there inflation in the economy? What are the expected and what are the major reasons why there has been a decline in the economy? Why has been a general inflation, increase in prices and commodities? Efficiency and effectiveness with which the public organization pursue their goals and objectives. Another objective here is that ensuring that costs are matched by at least equivalent benefits accruing therefrom. That is, all costs must be related to the benefit at which the whole citizen will benefit from the public sector. Providing the details of outstanding long-term commitments and financial obligations. We also have provided the means by which actual performance may be compared with targets set. So it gives a variance. It will compare what is the budgeted, that is, what has the government budgeted for, and what has been the actual performance, either in terms of revenue or expenditure. This budget is a forecast. It's a predetermined values, a predetermined figures, which might not be or may not be the actual figures that will be generated or expended for. So the public sector accounting give rules or provide a means for variances, that is, to monitor performance between what was budgeted for or what was actually incurred or generated. Preferring solutions to the various bottlenecks or problems identified. So this is another objective of public sector accounting, is to provide solution to various problems that have been identified. And how can you identify a various problem? For instance, in the previous year budget, there might be a recurring expenditure that may not warrant the purpose. So with that, the government might have experienced a problem. By extracting some of this expenditure that might not be necessary or necessarily incurred in the coming financial year. So the public sector accounting will provide solution in some of these bottlenecks. Further analysis of the most significant objectives for public sector accounting. Other objectives include the following, and some of these objectives has been mentioned in the general objective that we have explained earlier on. We have determined the legitimacy of transactions and their compliance with the statutes, that is the law. Providing evidence of stewardship, that is rendering accounts, transparency of all the activities that has been entrusted in the public officers. We've mentioned assisting planning awards and controlling, ensuring objectives and timely reports, and finally, evaluating the costs incurred and the benefits derivable. Are we following? Hello, are we there?
Yes, we are with you.
All right.
All right, sir.
Now let's take a look at the users of public sector accounting information. These users were being classified or categorized into two. We have the internal users and the external user. We're talking about internal users. These are the first or the primarily members that are entrusted with the public funds and to give accounts at the end of their end of their fiscal year. So these are the first users of public sector accounting. So we have the internal users and we have the external users. So the internal users include the following. We have the members of the executive arms of government. This is the primary users. This is one of the primary users of the public sector accounting. They are the members of the executive arms of government. Who are they? These are the presidents. We have the ministers and the governors, commissioners and chairmen of local governments. So these are the primary users of public sector accounting. Who is the president? This is the number one citizen that is entrusted with all the activities, either financial or non-financial activities, both security and welfare of the nation. So the president also serves as the chief accounting officer, that is giving a report of all the financial activities that has occurred during their tenure. We have the ministers, which work with the president. We have the governors and the commissioners who work with the governors. We have the chairmen of the local governments. Now, what are their interests? We can't talk about the users without talking about their expectation. This is their interest. What are they expected to carry out? So the presidents, governor, ministers, and commissioners, and the local government chairman, their interest areas are to ensure probity and accountability through record keeping and performance control, which are achieved through accounting information. So they must be accountable for all the financial activities, financial transactions that has occurred while they are running the office. So these are the primary users, the internal users of public sector accounting. The other user, we have the labor union. The labor union are in the public service, so which we press for improved conditions of employment and security of the tenure for their members. So part of the labor union, we have the Labor Union Congress, NLC, we have the TUC. These are the labor union. And what are the expectations? They look out for a good governance from the public officers, and they are representing the citizens to cry out for the expectation in terms of employment and security to the citizen. That's whereby their interests are always on the good governance to all the public at large. So that's whereby, that is the reason whereby at some points we find out that the labor union will fight the government to cater for some of this employment and security and other welfares to the citizens. So they call out for strike in order to protest, to show their interest on the public and the citizens at large. We have the top management members. These are also primary users of public sector accounting. Top management members. Examples of top management members, we have the permanent secretaries of various ministries and chief executives of parastatals. At all public sector, we have permanent secretaries. and chief executives of parastatals. What are their interests? What are their expectations? They are the conduit of accounting information generation, transmission, and serve a liaison officers between government, employees, and the public. External users and areas of interest. We're talking about external users. So these are users rather than the primary users of public sector accounting. We have the members of the legislature. Who are the legislature? These are the national, state, and local government levels. We have the National Assembly, we have the State Assembly, and we have the honorables in the local communities. So information in the accounts of government is the major media through which politicians render stewardship to their constituencies and appraise them of the endeavors of governance. So the National Assembly, the State Assembly, and the local government levels, their interest is also to the general public. They are to make this law, to enforce this law before this will be passed to the executive arms of the government. So they look into the needs that will be submitted by different local community to the National Assembly and the State Assembly to look into what are the problems, what are the major expectations in the local community. All this will be compiled and be submitted to the National and State Assembly to deliberate on how things will be better for all the citizens in the country. So the expectation is to pass all the needs by the local community and the nation to the federal level, to the executive arms of government to carry out action on ease, to ease the development of the local community that they are all representing. We have the members of the public. These are another external users. The members of the public, they are to demonstrate accountability and assist the people to appreciate otherwise the efforts of the government. These members of the public also form part of the general public. And what is their expectation? What is their interest? Their interest is to demonstrate the accountability, the responsibility that is being entrusted in the executive arms of the government by showcasing, either appreciating or otherwise, that is, give a bad or poor record, a good or poor record of the government. And the purpose of this is to give back the expectation to the governments that are expected to carry out these functions. So that's whereby the members of the public will agitate or we have to appraise the government when they are acting as expected, or otherwise they give an agitation on other things that they are expecting from the government to carry out. We have researchers and financial journalists. Researchers give a true life scenario, carrying out a research and following up on what is expected, giving a variance analysis, comparing the past with the present. They carry out a research. Before, if there has been a development, what are the things put in place for those developments compared to the present when there are poor governance, and looking into making research, what are the reasons for the poor governance? With this variance, they will be able to fine-tune or prefer a solution or recommendation to the general public and the government at large in order to cater and make life easy and give a suitable accountability at the end of each financial year. And we also have the financial journalists, which cherish accounting information to advise existing and potential investors. Investors, either internally or externally, or external, sorry, either internally or externally. Investors look at what has been improvements in terms of economy in any country they are investing in. And it is from the financial journalist reports that investors will have to give a decision either to go on to invest or otherwise. So this is part of the expectation of researchers and financial journalists. We have financial institutions which also form part of the external users of public sector accounting. Financial institutions such as we have the commercial banks, we have World Bank, we have International Monetary Fund, IMF. Accounting information assists them to evaluate the credit rating of a borrowing nation. Commercial banks were being regulated by each country, and they're having a general control which comes from the central bank. We also have World Bank, International Monetary Fund. The World Bank has their function. Also, the International Monetary Fund, IMF, they also has their own function. Part of the function is to cater for the neighboring country that are seeking for funds to develop their community or to invest in their country. So the expectation of financial institutions on public sector accounting is to carry out evaluation on credit rating of borrowing country. How are they carrying out this evaluation? They have to look at the records, the credit records of the borrowing nation, and how these countries or nations has been able to pay back their borrowings as at when expected. So they carry out an evaluation on government borrowings. Governments, apart from the ones reporting, so this another external, this one of the other external users of public sector accounting. We have government apart from the one reporting. Government collaborate on ideas of investment and research. So they require accounting information on the well-being or otherwise of each other. We have suppliers and contractors. Suppliers and contractors are eager to ascertain the ability of a government to pay for goods and services delivered. Only accounting information can be revealing. It is only accounting information that can reveal how suppliers and contractors have been able to utilize on the aspect of the supplier, how are they be able to deliver goods and how they are being paid, and contractors on the projects that has been carried out. What are the quality of service provided and what is the appraisal level by the government in order to cater for further capital projects to the contractors. We have political parties, trade unions, and civil liberty organizations. This is another external users. Political parties are one of the external users, and the expectation is to carry out a report or to monitor the performance of the government, existing governance, and how to look for way forward in order to improve in the welfare of the citizen. We have foreign countries and foreign financial institutions such as IMF, World Bank, as part of the external users. So foreign countries, what are their expectation? Expectation of foreign countries is to look at what has been the development in a country or nation before they can carry out investments in such country. We have foreign financial institutions such as International Monetary Fund. International Monetary Fund are institutions that is being carried out to look for poverty alleviation in a country and how to support the country in order to go out of a recess or problem in terms of financing. So that's their expectation. So these are the primary and the secondary users of public sector accounting. Now let us move on to differences between public sector accounting and private sector accounting. Any questions so far before we proceed?
No questions, sir.
Okay. Now, the differences between public sector and private sector accounting are analyzed as follows. We have the aims and objectives. The aims or objectives. The aims of private sector accounting is totally different from the aims of public sector accounting. The private sector accounting is being prepared by private ownership. This is a private organization that is being owned, and the major purpose of private organization is profit maximization, to make profits. So the purpose of the preparation of private sector accounting is for profit maximization. So private sector accounting is peculiar to commercial undertakings which have the maximization of profit as their main objectives. And how are they be able to meet up with this objective? This is by increasing in their revenue base and minimizing their costs, cutting costs, reducing in costs or expenditure. While the objectives of public sector accounting focuses on the provision of adequate welfare, creation of welfare to the people, giving accountability, legal and wise spending in mind. The general focus is provision of adequate welfare and giving accountability to the general public. So that's the main objectives of public sector accounting. We have income or revenue. Income or revenue. What are the sources? What is the sources of public sector? And what is the sources of private sector? Please take note of this. Examiner may ask us to state this in a tabular form. Examiner might ask us to state it in tabular form. So if you are expected to differentiate the private sector from the public sector in a tabular form, so you have to state the points, and on the table you have the private sector and the public sector. So with that, on your points, you now give difference between the private and the public sector accounting. On this revenue, the main sources of revenue by the public sector is through taxation, fines, and fees, whereas business concern obtain their income principally from the sales of goods and services rendered. That is, governments generated their revenue through tax, fines, and fees. Fines on those that are on defaulters, those that are going against the law, and fees, that is expected payments on any services that is being rendered or that is being enjoyed by citizens. Why private sector generate their revenue through the sales of goods or services rendered. Meetings, this is another point to differentiate between the public sector accounting and private sector accounting. In governments, there is no annual general meeting of stakeholders or shareholders. Unlike the situation with commercial enterprises, what government does is to hold public briefing on specific issues. When there are some issues to be deliberated on, government will have to provide or to have a meeting in order to find solution to such issue. But private sector usually have what is known as annual general meeting. We have public sector accounting operates predominantly with the use of fund accounting method in collecting its data and information. That's for public sector. They make use of fund accounting to collect their data and information. While private sector accounting uses the ownership style, which discloses the nature and sources of the enterprise's finance or capital structure. The capital structure in terms of equity or debt, that is, if it is from the owner's capital or other sources through debt or borrowings. But in public sector, they make use of the fund accounting method to collect the data and information. That is, public sector is not being owned by a single entity. This is a publicly owned, and it is being controlled publicly. So whereby you can have the sources of finance in, unlike that of the private sector, where you are going to have sources of the main sources of finance, main sources of capital, which will include the owner's equity. Owner's equity, which is the introduced capital by the owners, and other capital sources, which may be in forms of borrowings or debt. We have classifications. Public sector accounting mostly uses budgetary approach, recording and classifying items of revenue and expenditure under various heads and sub-heads to classify their accounting. They use budgetary approach. And under the budgetary approach, the classification will be under heads and sub-heads. But private sector accounting also makes use of budgeting and budgetary control to carry out their revenue and expenditure matter, that is to classify their revenue and expenditure. But the classes in private sector will be different from that of public sector, because the public sector makes use of heads and sub-heads, while samples of classification under the private sector may include description like we have stationery, we have transportation, we have subscription on data and discounts allowed, and so on. So these are the classic differences between the public sector and private sector in terms of classification. Public sector organizations are content with pricing products or services at marginal costs, so thereby catering for the welfare of the public. So while privately owned business ventures to recover not only marginal costs, but fixed overheads and even earn profits. Reporting. The public sector organization are accountable to the citizens of the nation through their elected representatives. Private sector concerns are unanswerable to their owners. So under the reporting, the public sector organization reports to the general public through the elected representative, while the private sectors, it is through their owners that the private sector gets a report from the management, that is the appointed or the employed management to manage affairs of the private sector. Statutory requirements. What are the laws that are governed by the public sector accounting, and what are the laws that govern the private sector accounting? The legal basis of public sector accounting is the nation's constitution. You make use of the nation's constitution and act of parliament to prepare the public sector accounting. Unlike private sector accounting, which draws its existence and strength from Companies Act, that is Company and Allied Matter Act. So, purpose of financial statements. We have the purpose of financial statements. Financial statements are structured. Representations of the financial position and economic performance of an entity. So the structure of the financial statements, which will include the equity, which is the financial position, and the financial statements, which will comprises the income statements and financial position. At times, it will also include the changes in equity and cash flow statements. Specifically, the objectives of general purpose financial reporting in the public sector should be to generate information that is useful for decision making and demonstrate the accountability of an entity for the resources entrusted to it by providing statistics on the following: on the sources, allocation, and uses of financial resources, on how an entity finances its activities, for the evaluation of the entity's ability to finance its activities and to settle liability, for the measurement of an entity's performance in respect of the set goals, and lastly, which will reveal whether or not an entity has acted within the approved budget. That's that about the introduction to public sector accounting. So question time before we move on to constitutional and regulatory framework of public sector accounting. Hello, are we together?
Yes, sir. Hello, sir. Hello, we are together, sir.
Hello, I can hear you.
Okay, okay, sir.
So what's your question, please?
That's the question. You asked whether we are together, and I responded that we are together.
Okay, all right. Okay, there is no problem about that. So if you don't have any question for now, so please feel free to send your question to the chat. If you don't have any question now, or you can ask any other question that you're having, maybe after the class. Now we are moving on to the next slide, which is the constitutional and regulatory framework of public sector accounting. When we are talking about the constitutional and regulatory framework of this public sector accounting, we are looking at what are the legal requirements, what are the bases at which the public sector accounting is expected to follow, what are the laws that are governing the preparation and the presentation of public sector accounting. At the end of this chapter, we are all expected to understand the legal framework of public sector accounting. We are going to discuss on the administrative framework of public sector accounting and basis of accounting, concepts and principles of public sector accounting. The public sector accounting is guided by the Constitution and financial regulations of the nation. So it is concerned with the recording of the mobilization and prudent utilization of finances of a country. That is how the financial or finances, funds of a country were being utilized appropriately. And the constitutional and legal provisions, we have constitutional and legal provisions in Ghana. That is their 1992 constitutional provisions of Ghana. So this is the law that is being governed, the legal framework of public sector in Ghana. We have Ghana Financial Administration. This is not applicable to Nigeria, but these are enactments that is being governed by their own constitution. Now, the legal and regulatory provisions in Nigeria, which is contained in the 1999 Constitution, provisions of the Federal Republic of Nigeria. Now, what are the regulatory framework or the provisions of public sector accounting in Nigeria? The 1999 Constitution of the Federal Republic of Nigeria authorizes the receipts and payments of governments, spells out the revenue allocation formula between the federal, state, and local governments, and stipulate the duties and responsibilities of the Auditor General. What does it imply? This states that in the 1999 Constitution of the Federal Republic of Nigeria, this gives out a detailed analysis of all the receipts and payments of the government in terms of revenue allocation formula. And this revenue allocation formula is being spelled out in the 1999 Constitution on all the revenue that is being generated in the federal, at the federal level. How will it be shared among the federal, state, and local governments? So the framework will be found in the 1999 Constitution on the revenue allocation formula between federal, state, and local governments. To facilitate the reference, specific areas of the 1999 Constitution and their provisions are as follows. We have the section 80, subsection 1 to 4, which stipulate the establishment and operation of the Consolidated Revenue Fund are discussed. The section 80, subsection 1 to 4, give a description on the operation, the establishment and operation of Consolidated Revenue Fund accounts. This will be fully discussed when we will be treating sources of government revenue and preparation of federation accounts. Section 81, subsection 1 to 4, these provisions treat the procedure for authorization of expenditure from the consolidated revenue. We also have the section 82, where there is no appropriation act yet. This section authorizes the president to withdraw money from the Consolidated Revenue Fund of the Federation for 6 months. We have section 83 that provides for the creation of the contingencies fund. We have section 84, the remuneration of the president and other statutory officers are covered by that section, by section 84. We have section 85, which is the audit of public accounts, is discussed in that section. So this is the guidelines under the Constitution that is being governed by law. And all this will be found in the 1999 Constitutions, how public funds will be used or utilized, how you are expected to generate revenue, and how they are expected to be shared among the federal, state, and local governments. So these are part of the sections that the provisions of the 1999 Constitution as being spelled out. We also have section 86 and 87 that treat the appointment and tenure of the Auditor General. Section 88 and section 89 gives powers to the National Assembly to conduct investigations and procure all evidence needed. We have section 149. Ministers are constitutionally required to declare their assets and liabilities and oaths of allegiance, that is before coming into power, by constitution under the section 149 in the 1999 constitutions. Ministers are expected to declare their assets and liabilities and oaths of allegiance. Section 162. Under this section, the Federation as an entity is statutorily required, that is, by law, they are legally required to create the Federation accounts. The Federation accounts, which it is for the whole Federation, into which revenue collected by government of the Federation is paid. That is, all collection by the government of the Federation will be paid into Federation accounts. That is section 162. We have section 163. This deals with the allocation of other revenue. We have section 164. That is federal grants in aid of state revenue are treated in section 164. We have section 313. The system of revenue allocation is dealt with under section 313. We have finance control. We have Finance Acts or Finance Control and Management Act of 1958. This is the major law on which the foundation of public sector accounting rests in Nigeria. So it's the basic law that governs the procedure and control of all financial operations of government. The Act regulates the management and operation of government funds. It prescribes the books of accounts to be operated and the procedure to be adopted in the preparation of accounts and financial statements. And these finance acts will be reviewed year in, year out. And currently, we're having the Finance Act of 2021, which gives out the guidance, the regulations, and the management of operation in government funds. We have Audit Ordinance of 1956 or Act of 1956 under the 1999 Constitution. We have section 13, subsection 1 to 3, that mandates the Accountant General of the Federation to furnish the Auditor General for the Federation with the country's financial statements. So this is the section that gives authority to the Accountant General to give reports to the Auditor General for the Federation on the country's financial statements. We are still going to talk about the responsibility of public officers, where we are going to state and spell out all the responsibility that is entrusted in the Accountant General of the Federation and the Auditor General for the Federation and other accounting officers. The Auditor General shall, within 60 days of receipt of the Accountant General financial statement, submit its report to each house of the National Assembly. That is both the National Assembly and the states, the National Assembly and the State Assembly. We have the Appropriation Act. Appropriation Act. Money bills, when passed into laws, become Appropriation Act. So they regulate financial matters, include the payments or withdrawal from the Consolidated Revenue Fund. So these are passed yearly, every year. These appropriation acts were being passed for the release of public money so as to render services in the year to which they relate. So appropriation act may direct a change in the way of operating any funds, apart from the contingency funds and Consolidated Revenue Fund accounts. We have the financial regulations. Financial regulation, these are laws that are governing the finances. They are accounting and financial control documents as a regulatory instrument. And this is in quotes, financial regulations. So it advocates uniformity in the recording of specified positions, transactions, and events. So they are the body of rules designed to assist the achievement of probity and accountability in government. Examples of rules deals with the opening of banks accounts, checks and collection of revenue. Financial regulation defines the duties and responsibilities of finance officer of government and other financial procedures in the public sector. So this regulation gives laws, give rules on how finances were being governed and how they are expected to be operated. We have treasury or finance circulars and circular letters. So these are administrative instruments that are issued for the purpose of guiding day-to-day routine operation. Before any funds will be issued, there are circulars that will be passed and warrants will be given to accounting officers that are entrusted in the release of funds. So these treasury circulars will be passed before warrants will be given. And this warrant is an authority to release funds. So they are used in amending existing provisions of the public service rules and financial regulations. Please, are we together?
Yes, sir.
We have Fiscal Responsibility Act. This act provides for the prudent management of the nation's resources. This is also a law, this is a regulations that governs the long-term macroeconomic stability of the national economy, secures greater accountability and transparency in the fiscal operation within a medium-term fiscal policy framework. So this fiscal responsibility is being set out for a short-term or medium-term expenditure. And the purpose of this responsibility, this act, the purpose of this act is that there are some expenditure that are urgent in nature, which may not necessarily be held before the next budget, before the next annual budget. So these are the short-term expenditure that were being set out by the government to carry out some urgent needs. So this act emphasizes the preparation of medium-term expenditure framework, annual budget, budgetary execution and achievement targets, collection of public revenue, public expenditure, debt and indebtedness borrowing, transparency and accountability. So it is under this Fiscal Responsibility Act that gives rooms to carry out or to prepare a medium-term expenditure framework, which is meant for some of the expenditure that might not have been included in the annual budget and need urgent attention. So there are provisions in this act. We have the Public Procurement Act of 2008. 1997. This act establishes a National Council on Public Procurement and the Bureau of Public Procurement, BPP, as the regulatory authorities responsible for the monitoring and oversight of public procurements, harmonizing the existing government policy by regulating setting standards and developing the legal framework and professional capacity for the public procurement in Nigeria. So this act set out the existing government policy and setting out a standard in developing the legal framework and professional capacity for the public procurement in Nigeria. So the act sets standard for organizing procurement, methods of procuring of works, goods, that is, it set out the methods for procuring works, we have goods, consultancy and non-consultancy services, as well as the procurement approval thresholds. That is a limit. It's also set out a limit on procurement for the Bureau of Public Procurement. Tenders, boards, and accounting officers for all ministries, departments, and agencies. Now, we've made mention of some of these acts and law that are governing the preparation of public sector accounting. We have the Finance Act, we have the Audit Ordinance. This gives authority to the Accountant General to submit the financial statement to the Auditor General, and also spells out the purpose of the Auditor General, giving a limit to when the Auditor General to submit the audited financial statement that is being submitted by the Accountant General to the House of Assembly. We have the Appropriation Act, discussed on the financial regulations. We have the Treasury or Financial Circulars, Fiscal Responsibility Act, which talks on the medium-term expenditure framework. We also talk about the Public Procurement Act. Now, other laws and regulations. We have the Economic and Financial Crimes Commission, EFCC. We have the ICPC, that is the Independent Corrupt Practices and Other Related Offenses Commission, Act of 2000. We have the ICAN, this is the International Public Sector Accounting Standards, or we also have the International Financial Reporting Standards. We have the Financial Reporting Council Act, Code of Conduct Bureau or Code of Conduct Tribunal Act of 1991. We have the Nigeria Extractive Industries Transparency Initiative, NEITI, Act of 2007. And we have the Freedom of Information Act of 2011. So these are other laws that assist and support the preparation and the presentation of the public sector accounting, Now we are moving on to the basis of accounting. Are we together?
Yes, sir.
The basis of accounting refers to how the transactions of government are recognized and recorded in the accounting books. So these are basis of government accounting. So this shows how transactions of government were being recorded and recognized in the books of accounts. Some of the common basis of accounting are used are the cash and accrual basis. The cash basis of accounting embraces the movement of cash as a basis of recognizing income and expenditure. This cash basis notes that transaction is being recognized as revenue when cash is being received or when cash is received, while expenditure will be recognized when cash is expended. So once money is received, once you receive the money in cash, income is recognized. Whether the goods or services have been supplied or not, that's not the concerns of cash basis. On the other hand, an expenses is recognized as having been made once payment is made, whether benefit has been received or not. What does this mean? You record transaction when you recognize transaction, and you record transaction when cash is received. And you also recognize and record transaction when cash is what? When cash is paid. The one you recognize or recorded when cash is received will be known as revenue or income. And that of expenditure will be recognized and will be recorded when cash is being what? Cash is being made, irrespective of whether the goods or services are being supplied or whether benefit has been received or not. In other words, income is recognized as it is received in form of cash, and expenditure is recognized as money is paid. So no difference is shown in the treatment of capital and revenue expenditure. So this is cash basis. Main characteristics of cash basis of accounting: it is very simple to develop an accounting system based on the mere recording of cash received and payments. That means it is very simple to operate. Financial statement generated with the techniques are not complicated. There are situations whereby if you are making use of accrual basis, that is, either you receive cash, you recognize cash, you still recognize and record transaction when they have not been utilized. So, but this one of the characteristics of the basis of the cash basis, that is, financial statement generated with these techniques will not be complicated, since cash will only be recognized. Transaction will only be recognized when cash is involved. So they are very understandable, and the accounting does not require the making of estimate for depreciation or doubtful debts, or adjustment for accruals and repayments. Yes, there won't be adjustment for accruals or repayments. If it facilitates fiscal stewardship, it gives a detailed report, a clean record. In public sector, where the concept of cash limits is used in budgeting the use of resources, compliance can be determined easily. Another advantage is that the concept does not make for proper measurement of performance. Doesn't make for proper measurement of performance. That is, it is not easy to measure the physical work produced and the asset consumed in doing that within a period of time. So the techniques does not recognize the time when resources are used, but only recognize the time when cash occurs. Performance under this approach is poorly measured, since recognition is given to the use of limited cash in any services delivered. In accounting for existing resources of the organization, of the government, only cash and near cash items are shown on the balance sheet. Traditionally, accounting in government is based on cash accounting. That is, public sector prepare their accounting. The basis of government accounting is cash basis. So government final accounts are prepared using only movement of cash as a means of determining income and expenditure. Secondly, we have the accrual basis. Accrual basis of accounting uses the notion of legal obligations to record financial transactions. Once there is a legally binding contract for the receipt of or rendering of services, recognition will be given to the income or expenditure arising out of the contract. So irrespective of either cash has been introduced or credit is being introduced, transaction will be recorded once binding contract agreement has been reached out to. So the recognition of revenue or expenditure under the techniques does not depend on the points in time when cash moves as either receipt or payment. So this concept says that the transactions and events of entities should always be recorded in the periods in which the services are rendered or received. So you recognize the transaction when the services is being rendered or when it is being received, rather than in the period in which cash is received or paid. So this is the opposite of the cash basis. So the concept recognizes the period when revenue is deemed to have been earned rather than when it is received. So you can recognize your revenue that is expected to be earned in the future. So revenue is earned when the benefit has been given and the giver is entitled legally to receive compensation for the benefit given. While expenses, on the other hand, are recognized when incurred rather than paid. Expenses are incurred when users of the benefits are obliged legally to pay in exchange. So the accrual concept leads to the making of adjustments in financial statements. So when you recognize transaction now, and the full payment has not been recognized, so there will be a need for adjustments on such transaction. Are we together, please?
Yes, sir. Yes, sir.
So the accrual concept leads to the making of adjustments in financial statements. So this gives room for adjustments. So when transaction is not being fully paid, so when it is expected to complete its payments, so there will be an adjustment for revenue and the expenditure side. So that's that about accrual basis. We have the modified accrual basis. The basic feature of this modified accrual basis is that it combines the cash and accrual basis of recognizing revenue. What does it mean? The modified accrual concept recognizes revenue only when made available and can be measured. So transaction can occur when binding agreements is being carried out. But before the transaction can be recognized or can be recorded under the modified accrual basis, so there will be available, the transaction must be available and can be measured reliably. Revenue is recognized and recorded when received as cash or collectible in some future time with some certainty. That is, revenue will be recognized when past payment is being collected and when future cash will also be expected with some certainty. That is, in so period, this particular transaction will be completed and the certainty will have been measured reliably. So as an example, under the modified accrual basis, revenue from property tax is recognized because the assets on which the tax assessments are made can be identified easily. That is, any revenue from property tax will be recognized since the assets on that tax assessment are made and can be identified easily. So revenue received from fines and court charges are recognized on the basis since they cannot be predicted and estimated with certainty. So you can recognize revenue, the receipt from fines and court charges since the transaction has not occurred. So we won't be able to measure how many fines you are going to have. So there is no certainty on that fines and court charges. So predicting future sales tax and value-added tax for the purposes of accruing the revenue, it will be very difficult. So expenditure on the other hand will be recognized for most items on the normal accrual basis. So under the modified accrual basis, so we recognize expenditure when the items were being expended, making use of the normal accrual basis. We have the modified cash basis. Modified cash basis. This concept also looks like the modified cash basis, a modified accrual basis. So the modified cash accounting techniques is the recording of transactions in the books of accounts of the government are not closed at the end of the year, but are open for some period into the beginning of the following year. What does this imply? This is not a cash basis, and it is not an accrual basis, but this will give a room for the books of accounts in government to be left open for a specific period before closing the book. So there are situations whereby this type of modified cash basis, the books of accounts will be left open for 3 months in the preceding year. And what is the purpose of these accounts to be left open? In order to recognize some transactions that are supposed to have been occurred in the previous accounting year. So that will now be adjusted into the previous financial statement before the financial and the books of accounts will be closed for that year. So that means the previous year financial statement can still be left open for the period of 3 months. That is up to March before the books of accounts will be closed. And the purpose of that is to recognize some transactions that are for the previous financial year.
Sorry, sir, can I ask a question, sir?
All right.
Please, does our government in Nigeria use this method in their operations, or they only make use of a cash basis?
And they make use of cash basis.
Okay. They don't use modified cash basis.
Yes, they make use of cash basis.
Okay, sir. Thank you, sir.
All right, receipt made during the current year, which relate to the past period, are recorded and accounted for as revenue of the previous period. So why on the cash basis, we said the cash basis recognize cash and record transaction when cash transaction is being made. So even the transaction might have occurred in the previous year. So since you are recognizing the cash, you are collecting the cash in the new year. So you recognize that transaction to have occurred now in the books of accounts. But the modified cash basis give rooms for books of accounts in the previous year to be left open for some period of time, so that transaction that has happened in the previous year will be adjusted into the previous year's financial statements. So receipts made during the current year, which relate to the past period, are recorded and accounted for as revenue of the previous period. We have the commitment basis. The commitment basis The accounting technique recognizes expenses as soon as expenditure decisions are taken. Once decision is being made, you recognize transaction. As soon as a decision is taken for the acquisition of a service or good, accounting records for that begin, and cash is set aside to pay for such costs. So this is a commitment basis. So you can be in a meeting, and this commitment basis is sometimes used in private sector. It's sometimes used in private sector when you're having meeting and they are deliberating on any transaction that needs to be carried out. Once agreements and decision has been made in that meeting, that transaction will be recognized either as revenue or expenditure. Once decision is being taken, that is commitment basis. So as soon as a decision is taken for the acquisition of a service or goods, accounting records for that will begin, and cash is set aside to pay for such So that's that about the basis of accounting. Now, under the commitment basis, financial transactions are therefore recorded as soon as the commitments are made. So there will be a room for variance in this commitment basis to make a comparison between what has been made as decision or what was actually met. So it is not when there is movement of cash for the transaction or when there is a documentary evidence in the form of invoice. So this policy is said to be encumbrance accounting. Cash is encumbered when it is set aside for a transaction. That is, cash is recognized and the expenditure will also be recognized when when the commitment has been made or when decision is being passed. So a practical situation is when orders are made for the acquisition of some assets. Once the purchase order is made, entries are expected to be made to reserve money for these items. For instance, you need a price for a generator. So you request from, let's take an instance, Kumi's company. You make a request for an invoice for a particular generator. For instance, let's say 350 kVA generator. Once the invoice is being sent and the management made a decision immediately that this will be what we are going for, cash will be set aside for that transaction, and that will be recorded as the transaction as occurred once decision is being taken. So though purchase order does not bring about any legal obligation, hence no liability, an encumbrance entity is made, reserving the necessary amount of money for the order. Now, advantages of financial regulations accounting manual. The books act as point of vengeance for those who infringe the rules stipulated. That is, the books act as a point of evidence for those that are going against the rules that is being stipulated. So it ensures consistency in the application of its stipulation. It ensures continuity. It serves as a training tool and as a guide. Disadvantage of financial regulation accounting manual: it is very rigid. It makes job monotonous, and workers may not produce best results in view of the motivational factors tutor. Disadvantage. Okay, this is also the disadvantage as we just mentioned. All right, so this is end of the class. I supposed to add practice questions to end of those questions, but looking at that, these two topics, most questions that will be asked are theoretical aspects. And don't forget, at this level, you will also be expecting to answer some short answer questions. And we need to include short answer questions to part of our revision class before we come to the end of the whole classes. So any questions so far? This is the end of today's discussion. Any questions so far?
No, not really, sir. In fact, the class is very, very enjoyable. Really appreciate it very much, sir. Thanks for your time and for your strength.
Okay, so please, if you have any question, you might not have the question now.
Okay, sir.
Any question, just feel free to send it to the group or to the admin. So your question will be attended to. And this video is being recorded. You have access to rewatch and rewatch again while in the class, while on your way to anywhere. You can put in your earpiece and listen to it, and you go through and go read again for better understanding. So thank you for your time. So meet you in the next class.
Okay, sir. Thank you so much, sir. God bless.
You're welcome.